I want to keep this very grounded. I mean, there's been, like this morning, we talked big picture and strategery and all these kind of things, and we want to keep it more grounded at this point. So if we kind of maybe start with a really real-world example, and let's say there's that I'm a senior sales manager at a company here in KL. I make about 180,000 ringgit a year. I find out about this new thing called crowdfund investing, equity crowdfunding, and I want to figure out how I can do this. Because I invest in the public shares some, I learned a little bit about it, and so I thought we could start out with Khalid just telling us about some of the ways that he would, if he was talking to this person I just described.
So this person, what's his name? Let's give this dude a name.
Jack.
Does he have to be a man though? What if it's a woman? What if you were a woman? Barbara.
Barbara.
Okay, so Barbara's making 180,000 ringgit a year.
Right on.
And you said that Barbara is a senior sales manager.
She's a senior sales manager at Mercedes-Benz.
Okay, so I'll tell you what Barbara goes through. Like now, I mean, I'm Malaysian, right? I spent 20 years of my life growing up here. I studied in a Chinese school, a government high school, went to Taylor's College, and so everyday Malaysian. So I know a lot of Barbaras. Like my whole extended family, a bunch of Barbaras, right? And some of them don't work at Mercedes-Benz. And some of them work at like Jaya Jusco or something, right? So we got a range. But let's talk about Barbara for a second. What Barbara's going to go through, because she's now working at Mercedes-Benz and she's making 180,000 ringgit a year. She has some savings. Yeah. So her mom's going to say, hey, Barbara, go and buy some shares. Buy some shares. Hey, property rising fast. Property, oh yeah, this property very good. This new launch of property, you want to go see? Not? So Barbara's going to get well-intentioned advice from mom, auntie, uncle, sister, brothers, dogs, neighbor. She's going to give them advice on invest in properties, invest in shares. Hey, your uncle Ah Chong is a revisor. Call Ah Chong. Ah Chong will tell you which share to buy. Very good. You got a lot of tips. You know what I mean? So Ah Chong the revisor, right? So properties, stocks. These are two things. But mom, if let's say Barbara just kind of got a start of a career and just got a promotion, mom say, hey, put FD first lah. Your FD not enough. Put more in FD lah. Now the FD rate what so and so bank got promotion now 3.05% or whatever, you know. So she's trying to put some FD minimum 100,000 ringgit. She's trying to put some of the savings in FD. So you got three options if you're Barbara: FD, property, and stocks. If let's say Barbara spends the next 5 to 10 years of her career doing a lot of properties and stocks and FD and maybe dabble a bit of index fund, mutual funds, and so on and so forth. Maybe blended every year instead of getting 3% off FD, say she's so savvy, maybe she makes 5% a year. Maybe she makes 8% a year. So if she's starting off with 180,000 ringgit salary a year, maybe she manages to save 100,000 ringgit. 10 years from now, 8% year on year. If she's so savvy to do 8% year on year, you know she's going to get some money. But guess what? How many percent is inflation? I don't even know how much is inflation. But I'll tell you my experience of inflation is that every time I go to Starbucks, it just gets more expensive. Every time I go to even you eat a pan mee na, kolok mee la, or whatever, the char kway teow also is increasing very fast. So I didn't sit down and quantitatively analyze the average of the nasi lemak and in Uptown versus the what, you know. So I don't have any data on this, but it feels to me that the price increase in my nasi lemak is faster than my 3% to 8% I'm getting from my freaking savvy investments. And I know this is how a lot of Malaysians feel. And this is not even a Malaysian story. This is an urban story. This is a rich getting richer and the middle class getting stuck in the middle class and the poor getting poorer kind of story. And I don't want to tell a story of revolution here to say that, like, you know, it's going down or whatever, right? But there's a strong argument to say that if you're going to follow the middle class paradigm and say that you're going to do your properties and your stocks and your FD for the next 10 years, and you can get your 8%, let's say you're a rock star, you get your 10% year on year, will you still be middle class in 10 years? Or are you going to be upper class? Are you going to be middle upper? Or are you going to be the new lower class? We don't know. There's an argument that you might be the new lower class. It's just getting so expensive so fast. Just look at Hong Kong, look at Singapore. One day you're going to wake up, I can't buy a property for my kid. My dad bought me a property. I can't buy a property for my kid. I can't send my kid into a private school. I can't afford that. But I work just as hard as everybody else. What happened there? So enter the world of this whole crowdfunding and all this kind of stuff, right? I mean, there's a lot of jargons, like you mentioned, a lot of jargons around this crowdfunding thing.
Yeah, totally.
Yeah, but to me, when I look at it, you're just trying to invest in something that makes you more money. And when I first did my first company, I was, I took salary for many years because, you know, I just didn't take the professional job, right? And so I was paying myself for a long time. Like, you know, Miss Chokubi here is my VC over here. She's my first venture capitalist. You know, she knows how much I was paid for a few years, right? So I didn't even go to Starbucks. It's too expensive. So I don't have any savings. But the moment I sold my first company, I had some savings. And what did I do? I don't know anything about property. I don't know anything about stocks. I don't know anything about FD even. It was like a new concept for me because I never had money for FD. So then I went through what Barbara went through. Suddenly my mom got involved, right? We're having family dinners. Oh, you know, this bank, the FD, no, 3.05%. Right? Suddenly I got all these wealth advisors around me. Right? All my brothers, sisters, everyone's a wealth advisor all of a sudden. I was like, whoa, hold up. I'm just going to invest in what I know. I'm going to invest in startups. So I made my first angel investment was in iMoney. So Ching spoke earlier, I think. I don't know if Ching's still in the room. I think he's got real work to do, so he just went back to work. But so my first angel investment is iMoney. And I don't have any sophisticated way to do this. I'm just doing it like an idiot. I was like, I met a guy who's kind of smart from my school. He wants to do something, just came back from Australia. I'm like, there's this idea in the UK, you know, looks like a really good business model. Why don't you do it? Then he's like, okay, right? So he comes to my house on weekends, right? You sit in my living room, right? And then we get some freelancers, build up a site together, look for somebody, hire his co-founder in, hire his CTO in. Little did I know, I became like a one-man incubator. I was like, startup accelerator in my living room. iMoney, in the next 2 years, went on to become the ASEAN leader in financial comparison, this business model. And this specific business model is a multi-billion-dollar business model in the US and the UK. Multiple examples. Even if you're number 3 in the market, you're like a huge company in the UK, huge. So Southeast Asia, they're the leader right now, you know, and their fundraising track record is just through the roof. And like they just keep going from strength to strength. So the amount of, me being the angel investor or the initial shareholder, you know, that helped put things together, I have a minority stake. But this minority stake, did it grow 5% every year? No, it did not. Did it grow 10%? No, it did not. It grew like a few 100%. I would dare say like hopefully, you know, as things progress, maybe thousands of percents of return in a matter of years. So was that a bit better than property and stocks? I'm not saying that only invest in angel investing because I'm an idiot. Like I put most of my money into startups. You know, most of it, right? Because that's what I understand. So I have very little in properties and stocks. But some people have like one third, you know, some like Patrick Grove of Catcha, you know, he's done pretty well for himself, you know, he's got quite a good mix, you know. So people kind of blend their investment strategy. But the thing about Patrick Grove and me is that we accidentally happened to be able to spot the iMoney before the iMoney became an iMoney. And
that's what this is all about, right? Providing more people with the opportunity to spot earlier companies earlier when you can make the big returns.
Exactly. Because if you're Barbara and you're still doing your job, you got a job to do, man. You got your bonus to work for. You don't go to startup events and go to SC by SC and listen over here and, you know, like, go outside to the booth. Oh, go get .my, or what are you doing? Can I invest in you? No, you got no time for that stuff, right? So you need somebody to give it to you.
That's right.
So with crowdfunding, and with the government initiative to create a platform like this, Barbara's everywhere in Malaysia, Henry's and Achong and Ako and Ramli and you know, everybody has a chance to spot the iMoney before the iMoney becomes iMoney, has a chance to invest in a job street before it becomes a job street, has a chance to invest in Alibaba before it becomes Alibaba. And how many countries actually changed their laws to allow the middle class to have access to an asset class which traditionally has been held tightly by the super wealthy? Not many countries. So I was shocked when Adam first approached me. Adam, I don't know if you're in your room, right? But it's like when Adam first approached me and said, Kylie, SC is doing these things and we're gonna do these laws. I'm like, wow. I've been investing in multiple countries in the region. You know, I've spent a lot of time in other continents, and I don't see many countries changing the laws so the everyday man on the street can invest in an asset class that can grow way more than 8 to 10%. Yeah. And I was impressed. And he asked me to help out with this and that, and I'm here. You know, like I've changed the entire travel schedule just to be here, and because I think this is such an important thing to talk about, and it's such an important thing for all of us to get involved in. And people underestimate this. They underestimate it all the time. The government's doing, and I'm not saying I'm pro-government, left wing, right wing, whatever, I don't care, right? What I'm saying is that some people in this room are trying to make a difference, but I'll tell you the challenge for Malaysians is, no matter what SC is trying to do, and no matter what all of us are trying to do with crowdfunding, we're gonna show them the door. A lot of them are happy to just complain and send hateful tweets on Twitter. They're too busy sending hateful tweets on Twitter to actually walk through their door themselves. 10 years from now, they're doing their FD, they're doing their stocks, they're doing their properties, and then they see they can't buy the Starbucks that they want to buy, even though they work just as hard as everybody else, and they're complaining. Oh, yo, you know lah, Malaysia economy, government, that's why I'm poor and I'm miserable. But 10 years ago, somebody gave them a freaking pitch in, gave them all these kind of companies to invest in, and they didn't want to do it. They sat there and just tweeting away on how angry they are at the government or whatnot, and they didn't do it.
Well, that's the thing, I've done this in a lot of countries, in a lot of places, and the things that we typically hear, are, well, you don't understand, we're very different, we're very conservative, we don't like risk. No one likes risk, right? No one likes risk, but it's a part of life. And what this is an opportunity to carefully assess this. I think we have to talk about, now when we talk about these big wins and these big opportunities, the Alibabas, we have to talk about the other side. Yeah. We have to talk about the fact that for every one Alibaba, there are 100 companies that don't ever get that far.
Yeah, probably 100,000 companies.
Right. Yeah. Or even just a success versus a failure, and just maybe it's 1 in 10.
Yeah.
And so I think that yes, this is an incredible opportunity, and this is again, the SC here has taken a huge leadership role. It's taken a huge leadership role in Asia. It's taken a huge leadership role for Muslim majority nations. It's taken a huge leadership role for in the world, really, in developing economies by doing this. And so I think it's really fantastic. And so,
but you're right that SC also has to protect the downside, right? They can't let all fools rush in and everyone's going to lose a bunch of money. Then it's not going to be good for anybody, right?
Right. And so it's like that. So we have to provide the tools. So two things. One, it's like protecting individual investors, providing them with the right tools and the right knowledge to understand how to make these investments. But then also, I think the biggest thing is just diversification. Yeah. And I think maybe you can speak to what VCs do to diversify.
Yeah. He talked about very important points. Two things you just mentioned. The first one is that there is inherent risk in any kind of asset class, any kind of investment, and we can't ignore that risk. We can't just talk about the success and not talk about the failures or the risks involved. So I think we could spend some time talking about risk. The second thing you talked about is that mitigating that risk. What are the strategies, tools, education, and things you can do to mitigate that risk? So we'll talk first about the risk elements. So I think you mentioned that around the world you see people say that, oh, Malaysia culture, we're not so risk savvy, right? Or any culture in the world, we're not so risk savvy. Well, I look up to Tony Fernandes in a very big way, of course because of his achievements in business, but also because of his realism when it comes to understanding now everyone can fly. He understands everyone. He understands what the everyday Malaysian feels. And in one of his speeches, I was still a student at the time, and then he was talking about the launch of AirAsia, and I attended that talk. He said that when Bali had bombings, nobody wanted to fly into Bali. All the airlines canceled their trips. So what did he do? He flew more planes into Bali, right? And a lot of people are telling him, Tony, are you crazy? Like, why are you flying more planes into a place that just got bombed? Like, who the hell wants to fly there? And he said that one thing that has built AirAsia is that, if you make it cheap enough, Malaysians do anything. 1 ringgit flights to Bali, the Bali government subsidized a lot of that, and and all the planes were full. Oh, a bomb might go off and kill you. Oh, no, but it's okay. You get like 50% off the hotels, all right? You just go. Oh, I haven't been to Bali all week. This is the right time to do it. Even though a bomb just went off, that's fine. It's like a few ringgit cheaper. Let's go. So he understands that everyone can fly. That's why he can get everyone to fly, because he understands that part of Malaysians, right? And from what I understand about my mom and my dad is that once I got into startups and investing activity, they don't know about tech startups. My dad and mom, still don't understand what I do for a living. They don't. But
my parents don't either.
Yeah, they don't, right? But over dinner conversation, I'll tell them about how iMoney is growing fast, how this and so company is growing good, and then one day my dad asked me, "Hey, Khalid, can I invest?" Like, you don't even know what I'm doing, what you want to invest, right? He said, "Don't you say keep growing, everything, grow, everything?" Then he started telling me, like he was in an oil and gas company, which he worked there for like 20 years, and then it got publicly listed. You know, he worked 20 years for it to be public. And he's looking at the companies that I've built and the things I'm involved in and to get public in 5 years. And it's that simple. He's like, am I going to invest in something that takes 20 years to become a public company? I'm going to invest in something that can become a public company in 3 to 5 years. And then, so we had a conversation, and I was there telling him. And I think if an everyday Malaysian were to, if a lot of them are afraid of risk, and I think just afraid to lose money, it's not afraid of risk.
Everybody's afraid to lose money.
Yeah, they're afraid to lose money. But I think it's that the greed will overcome them when when they've got like 50% off a hotel in Bali, or they got a sale going on, or even though a bomb just went off there.
They say it's all about fear and greed, fear and greed.
Yeah, so there is this nuanced relationship between fear and greed. And if they get greedy enough, they'll do it. So you'll see the first generation of companies, the iMoneys and so on and so forth, getting funded and going all out there to become big companies, generating great returns. 5 years from now, you know, some of you will get involved in crowdfunding, some of you won't. Some of you would have invested in the next job street because you went on pitchin.my and to pick a company there. And you'll be on a mamak table with your friends and say that, oh yeah, you know, I just try only lah, you know, I just put 1,000 ringgit, go and pitch in, I just gonna put in this company. Oh, I didn't know we can become the next job street. You know, you just try. And then once those stories start propagating, so it might take a while, that's what I'm trying to say. It might take a while before this greed starts to propagate. Let's say we ran 30 years ago, the stock market. I'm sure it took a while for a lot of stock market wins before people got greedy. I'm sure it took a while before the ramp up in property prices in Bandar Utama. Oh, yo, I buy 300,000 ringgit now, 2 million or whatever. You know, property stories start propagating and you create that greed.
Silicon Valley wasn't always Silicon Valley.
Yeah, things take time to ramp up. But I think as long as the greed starts overcoming fear, then you'll see entire nations move. Now, the nuance over here about today, though, as far as timing is concerned, Warren Buffett, I think it's either he quoted it or somebody stole it for somebody else, and it was just on the internet, and I believe it to be true because I saw it on Facebook, said, when people are fearful, that's the time to be greedy. And when people are greedy, that's the time to be fearful. And today, people are fearful when a new asset class is introduced to them. We're telling you that this asset class had made so many people rich, and except those people is who you know. But now you don't need who you know. We're just showing it to you directly. And a lot of people are fearful. A lot of people continue to be fearful. A lot of people in this room will not invest in it. I know that. But for those of them who are greedy when others are fearful, they may start to make some early bets.
But they're doing that with a percentage of their income. They're not doing that with all their savings.
Exactly. That's when we get to your point about mitigating risk. Now, when I started investing my money into tech startups, I didn't invest all of it. I invested a lot of it, like maybe half. But the rest of it, I put a lot in FD. I locked up like some money in FD for 2 years. Probably the worst decision I ever made. But I did it because I was scared. You know what I mean? I didn't want to lose all my money, right? And I wanted to have like some kind of a diversified portfolio, you know, which I question sometimes. But I just did it because I didn't want to put all my eggs in one basket. And in the same way, I think nobody's going to put all of their savings. You know what? You come home from SC by SC today, you go back to your wife, honey, we're going to sell the house. I saw a couple of companies on Pitch In. They look really good. We're going to sell the house. We're going to get our kids out of this KTJ, right? I'm going to move them back to SMKDJ. I'm going to invest in more companies. No, that's not going to happen, right? That's stupid. So I don't think anyone and SC or anybody else would be afraid that Malaysians are so stupid that you say, hey, we got something new and then suddenly sell everything and lose all their money. I don't think that's going to happen. I think for the most part, people are going to dabble. They're going to dabble. So I think the best way to mitigate risk and to get started with a lot of these things is to dabble intelligently. So a new angel investing book by David S. Rose, you know, you can Google that up. It's a lot of good stuff in that book. The essential of that book, so you don't have to read it if you don't want to, I'll tell you what it is pick 50 companies. That's it. Pick 50 companies. If you pick 51 companies, statistically you don't get that much more diversification. But if you pick between 30 to 50 companies, it's good enough diversification for you. So let's do a bit of quick math. Who's from Chinese school? Who grew up in some kind of hua xiao like myself? Okay, I know you guys like math, right? Because you're forced to and you're caned into it. So let's do some math. Let's say you have 30,000 ringgit. And you want to invest in 50 companies. Someone tell me how many ringgit per company that is. I see somebody whipping an iPhone. Come on, this is easy. It's like children have this fast and you got an abacus over there to give you the answer. 30,000 ringgit, 50 companies. Is it 600 ringgit? Okay, 600 ringgit, right? Let's say half of the companies die, right? So 25 companies are alive. And out of the 25 companies, they seem like they're doing well, but eventually they die too. You're left with one company, which becomes, you invested in them at say, whatever valuation is, but they return you 1,000x. So what is 1,000x on that one company? 600,000 ringgit, right? So if you invested 30,000 ringgit 5 years ago, and then 5 years later you have 600,000 ringgit, how many x return in your portfolio that is in 5 years? 50? 30,000, 20x? 20x, right? 20x. So 20x return in 5 years. Okay, now this answer I don't know. How many percent return per year is that? 20x in 5 years. 400% per year. 4 times per year, 400%. If you don't count compounding or whatever, yeah, it's about 400%, right? Now, how's 400% on that 30,000 ringgit versus putting 30,000 ringgit in a down payment on a property and paying off the loans versus 30,000 investing in AirAsia stock, like no hate towards their stock, but any other stock, right? Malaysia Airlines stock for that matter, right? Any stock across 5 years. I think 400% per year is okay. Even if you don't have 1,000x return, if you 100x return, that's 40% for 5 years. That's okay. So if you have some of your 30,000 ringgit in property, some of your 30,000 ringgit in stocks, some of your 30,000 ringgit in FD, and you got another 30,000 in 50 angel investments, all because you diversified that way, you have a chance in getting a 100x company. And I'll tell you that you invest in 50 companies, not all of them will die, I hope, right? I mean, if the pitch-ins and all of them do their job right, and the rest of the government agencies here are funding the right company, the ecosystem is trending in the right direction, I don't think all 50 of them will die. So my job at 500 Startups is that we're venture capitalists. We're the most active investor in the world. We've done 850 companies in 40 countries in the past 4 years. My fund is a Southeast Asia fund. I've done 30 companies in the past 7 months. And I'm doing the same thing you guys are doing, except that I want to get 70 companies in my portfolio. Hopefully some of them become 3x, some of them get 5x, some of them 10x, some of them 1,000x. That's what I'm hoping for. So far, the past 7 funds have shown that it's pretty consistent, that you're not going to lose everything. And if you look at David S. Rose's book on Angel Investing 101, and if you just read any literature out there, you'll see that heavily diversified vehicles, portfolio theory, you just have a bit less risk. It's like your stock index versus a stock picker, right? Conceptually, kind of. So if you invest in 50 companies, I think that's the first thing you do. That's the first thing I would do if I'm like if once crowdfunding gets passed through and I'm doing these things, I'm going to invest in 50 companies minimum. First thing I'll do. Second thing I'll do is that while you've mitigated some kind of risk through diversification, you want to increase the rewards profile. So how do you increase the rewards profile when you're just this dude who's sitting on your laptop or your phone investing in companies on your phone? Now, which one of you comes from a corporate background? Okay, so Navanil's over there, big fan of Navanil. So Navanil's from telco and media. What if he picks 50 companies in telco and media? What if he picks 50 companies in telco and media, and because he's invested in them, emails the founder to say, look, you want to have lunch, talk to me. I got 20 years in telco and media, and I'm willing to look at your business and give you some advice if you need it. I know a lot of people in telco and media in Malaysia because I spent 20 years in it, and I can help you open doors, get you customers, hire some people for you, I can help you out. 50 companies asking you for 50 lunches a year. You got 365 lunches a year. So you've just invested like what, 18% of your lunches or something, right? into of your lunch time into these companies. Will Navanil and his 50 telco and media investments, can you argue that they may have a higher returns profile because Navanil and his 20 years of experience in telco and mobile has helped these startups? I think yes. And what if these companies don't just have a Navanil to help them? What if they've got like 20 other investors who invested in them, also coming from telco and media or maybe other industries. Maybe some of you are in HR, and out of the 50 companies you pick, like 5 of them are HR-related companies. Maybe some of you are in like a B2B enterprise sales. You want to invest in 50 enterprise sales companies. I think that on one hand, you're diversifying risk. On the second thing, what you're trying to do is you're trying to invest strategically in things that you can add value to, that maybe helps with the returns. If you can do those 2 things alone, I think you're going to come into a new asset class like this much more smarter than everybody else out there.
I think that's a really important point, just because people talk about the crowd, and people say things like, oh, well, there's smart money and then there's not smart money. I think that's sort of an old mentality, because that indicated the people who had access to deals, like the very tiny few people who had access to these deals before, and the fact that more people have access to these deals, more people have access to information today who can add value today. And one of the really interesting things about crowdfunding sites and companies that use these services, they have an ongoing opportunity to engage with the investor. And so you can engage with your investor in a meaningful way. I mean, one of the things that was talked about in an earlier session was, oh, how are you going to manage lots of investors, and how is that going to work, and what is that going to be terrible? Well, if you had to do it the old way forever, yeah, that would be. But a couple of things are important. While you have tens of thousands of people who are donating to sites like Kickstarter for on donation-based crowdfunding, typically on investment crowdfunding, we see less than 200 investors. And typically it's much more like 50 to 100. Yeah. And so you're really just you're managing a much smaller number. Now, even then, if you say that's too many, then they're fine. So then one of these opportunities for a business to be created in the space that could make a lot of money, I think, is creating an investor relations tool. An investor relations tool that's socially aware, that plugs into existing social networks, that allows me as the crowdfunding platform to offer this service, or this platform can offer service on many platforms, right? And then be able to, I pay a monthly service fee, and I can engage with my crowd, I can know what their LinkedIn status is, I can see I'm having an accounting problem, which one of my 50 investors is a CFO? That's smart money.
Yeah, and I think what you're saying about the availability, the increasing availability of information, right now people feel more at ease investing in a public company because there's a lot of publicly available information. But right now, when I invest in a private company, I'm going to Google the founder's name, I'm going to go to his Facebook, I'm going to see who his friends are, I'm going to see where he went to school, I got my own due diligence, man, just like stalking them, right? There's information you can get, and you can talk to them and get the information you want. So I think that with that, if SC or anybody or Pitch In or whoever is in this space or is looking at providing these tools to give more information, that helps the investors make those decisions. That being said, I also want to point out that, and this is just from what little I know about the initiatives that's going on in Malaysia right now, is that there's not just going to be one platform that they're going to promote over here, and not just Pitch In, So Crowdonomic is a regional platform as well, and they have a lot of global talent. And there are a lot of like earlier on today, the previous speaker comes from the UK crowdfunding.
Crowdcube.
Yeah, Crowdcube, right? So you can exist in a world where there are multiple platforms offering different companies, and it's kind of like Job Street, except there's Jobs DB and Jobs Broadway, Jobs whatever, right? You want a job, there's multiple places to look for a job. I think if you want to invest in a private company, a fast growth private tech company, there could be multiple avenues to do it. And I think that world is quite healthy for the everyday Barbaras.
I mean, one of the,
Or everyday Malaysians, if you missed the Barbara reference, yeah.
So one of the things for Barbara, though, too, if we get back to her, is just like, one of the mistakes, in my belief, one of the mistakes that was made in the US legislation was that it doesn't allow the crowdfunding of a fund. And this opportunity to say, the ability for, because maybe I don't personally want to pick, Barbara doesn't want to personally pick all 50 companies. Yeah. She may want to pick 20, but she may want to say, I want to put some money into a fund that's going to spread out my money across another 25 companies. And so this opportunity to do that, and I know that's one of the things that's being considered here, and certainly I would vote in favor of that, because I think it really helps with that diversification.
Yeah, I mean, it's kind of like, let's say we live in a world where Navonil here has invested in 50 telco and media companies, and he has made a 50x return in 3 years. And on the platform, he's seen as the guy who made 50x returns on his bets. And Barbara over there is like, oh, I'm so busy to do these things. I'm only 5 years working experience. I don't have the experience on Navonil. I'm just going to bet on whatever Navonil is betting on, right? I just bet on Navonil, right? And so you live in a world where Navenue can start a fund. And people can bet on Navenue. And you just give the money in Navenue, and Navenue will just like invest in your money for you, right? It'll take a cut out of that equation in some way. But you don't have to spend 20 years gaining the experience to do it. You just tap on his experience. Now, I love what AngelList is doing in general because they are taking steps in that direction with syndicates. So even for 500 startups, like we're investors in AngelList, and we're the most active profile on AngelList, and we also are big backers of the syndicates platform to create syndicates. So all of this is in the US, of course. But what I'm saying is that Malaysia, out of all the countries in the world, seems to be the ones which are starting this sooner than other people. And that's very encouraging. And I think a world like that could exist in Malaysia very, very soon.
Yeah, and I think it's, one of the other things about like AngelList that Kylie's talking about, in talking with a couple of my friends who are VCs in the Bay Area, they say that AngelList and Kickstarter have changed the way they have to do business. They have to go check every morning to see what's going on AngelList. And so this notion that VC is going to like run away from companies that have been crowdfunded, I mean, good deals are good deals. And they'll always get funded. And they'll always get follow-on funding. And so it's just a matter of incorporating this new way of doing business into your kind of typical process.
Because what happens for any new wave of change? We take a couple of steps back, right? We're just talking about the evolution of finance and financial vehicles here. And if you talk about the evolution of anything new, some people adopt it, some people run away. So now zoom back into venture capital, like with the advent of Kickstarter and AngelList, some people shy away from it and stick to the traditional ways of leading their lives. And some people adapt to it, evolve with it, take advantage of it, exploit it. And they stand to gain something. So for a lot of venture capitalists, you're right to say that a lot of people are waking up. They have no choice but to play ball, because that's where the world's headed. So they check AngelList every day, they check Kickstarter every day, trying to spot the next big company, because it might just be there.
Yep. So one of the questions that just came in, hopefully it'll come up on the screen here, but let's go ahead and read it. For you, Kylie, it says, with 500 startups, diversify and invest capital into companies on Malaysian equity crowdfunding platforms in the future.
Yeah, of course. Like the way I would approach it is that I can do it two ways. The first way is that I look at a company is up there, oh yeah, I can do that, boom. I just invest the fund money into it. But that is dependent on my limited partner agreement that I have with the investors in my fund. Because a lot of the fund documents are designed for me to make direct investments, so that's something I got to check. Also because we lose a bit of cut in between, right? So I can't make any firm comments on that yet because there's a lot of things I have to check up on. But what I would say is that I would check this every day because I want to see the next big company is happening there. And what would be very encouraging is that, let's say a company goes on a crowdfunding platform and they receive 100 backers, oversubscribed, 500,000 ringgits in this company. I am so excited to talk to the founder and say, hey, can I invest too? And because I'm late to the game, the founder will say, hey, dude, you're late to the game, man. My early investors here who believed in me, they got this lower valuation. Look, my company has grown so much. If you want to come in, you come in at a higher valuation. And I'm like, I'm okay because I have less risk because it's been validated by all these other investors and there's so much more business traction. I come in at a higher valuation. So if, let's say, I come in at a 2x higher valuation, the early investors already make that gain, realize the paper gain on that increase in that valuation. So I can work with it both ways. I can come in after it's been fully crowdfunded, or I come in before it's fully crowdfunded. I can also invest in a company and say, hey, I'm going to put 500K in you now. The rest of your 500K, you get on this platform and you go shop for for more investors. You get the Navonils and the Barbaras to invest in you, right? Because it's a good marketing tool as well. So I would like them to do that. So there are multiple ways a venture capitalist can work with these companies. Now, just to give you a real example, and it's very important that I give you a real example because this is already happening. An Indonesian founder, his name is Dema Teo. He is the weirdest founder I've ever encountered at events. Because he would come up to me and pitch me his idea, pulling out a vibrator. It's like a sexual toy, right? He's like telling me about his vibrator he's created. Because it's controlled from his smartphone. So he's like, look, hey, this is like a smartphone controlled vibrator. So for years, he's running around pitching, he's whipping out his vibrator and events. And I'm like, whoa, keep that back in, dude. He's whipping it out. It's so hard for him to raise funds. It was so hard for him to raise funds. A lot of male VCs like myself, I'm not as intimate with vibrator usage. It's not my area of expertise. I don't have 20 years of vibrator intelligence, right? So I don't understand the business that well. And because he's a guy with a vibrator, he's not had much success pitching to girls either. So he put himself on Indiegogo, which is a crowdfunding platform. He got national press in the US, oversubscribed. I forgot how much it was. He raised 700 grand or something obscene on Indiegogo. Because it turns out a lot of people are into that smartphone-controlled vibrator idea. Apparently, the use case was long-distance relationships and the audio tracks and 50 Shades of Grey. Like you're listening to 50 Shades of Grey and it auto-vibrates. There's a whole thing to it that, you know, people are intimate with that, no pun intended, intimate with that business understands. And those people aren't going to go out there and say, hey, I'm looking for a portable vibrator, right? It's like they found it on Indiegogo and it's anonymous because you're behind the screen, and so they invest in it. After he gets oversubscribed, VCs from around the region come back to him. Oh, Dema, I'm so wrong, right? Like, congratulations on your success. Let's talk. True story.
Let's transition.
Close to home. Indonesian entrepreneur using a US crowdfunding platform, getting Southeast Asian venture capital to invest in him. Now come back here to Malaysia. If SC doesn't do this, the Malaysian founder will use the US platform and get some Japanese investor, and the Malaysians will never. The Malaysian government has spent years educating this dude and not ever going to realize and capture the value that this guy has created. But good thing is SC is actually doing it. So hopefully Malaysians can get Malaysian investors and get Malaysian VCs, right? And the ecosystem kind of gets more, you know, the virtuous cycle actually happens.
Yep.
More questions?
So this one that just came up, I think is pretty interesting. Looking at this hands-on, hands-off perspective.
Funny, I just looking at the big clock over there. I've got 4 minutes before I got to jump into a cab and catch a flight. So, okay, let me tackle this. Angel investing allows us to perform first-hand due diligence on investee companies and get involved in monitoring and guidance schemes. Isn't equity crowdfunding too hands-off? Okay. That's a really good question. Well, this is a kind of a secret paradox thing, right? And a lot of times investors have the ego to think that they know more than the founder and that the founder needs their guidance. If not, they're going to fail. Sometimes the opposite is true. If the founder really needed so much guidance and so much monitoring, he's going to fail. A lot of my top investments, I'm not saying all of them because there's a mix of these things, but a lot of my good investments, they don't even talk to me, man. Like, I'm useless to them because they're just so good. And when they have a problem, they call me, they say, look, this is something I can't solve. Then I can't solve it either because like I'm incompetent at so many things in my life. So I'm like, I don't know the answer, but I've got a network of 850 companies. Somebody might know the answer. Let me hook you up with someone. So I can do that, and I'm not very hands-on. Because people ask me the same question. Like our group invests in 850 companies in 40 countries, and we only have 12 investing staff. We're not hands-on at all. But the fund still performs. Companies still do well. Some of them die, and a lot of them still do well. Because we're spreading the risk. You're bound to find a lot of these entrepreneurs who don't need so much hands-on guidance. On the flip side of it is that we live in a world where it's not one or the other. A lot of these companies who get on these crowdfunding platforms, they already have early investors. Like the vibrator dude, it's called VibeEase, if you guys are interested in investing. VibeEase, F-I-B-E-A-S-E. But it's already oversubscribed, so you can't invest. But if you see like example of VibeEase, they had crowdfunding. And they had the institutional venture capitalists sitting on their board. They have both. Now, what a good deal is that? You don't just get one benefit, you just get both. So I hope that answers your question.
And at that point, I think we'll let you get in your cab so you can get on your flight.
We have 1 minute for one last one if we want to squeeze one in. And we want to shout one from the crowd? That'd be fun.
Sure.
Navo!
The challenge in the equity market in Bursa also is the fact that because there's not enough of capital out there, the valuations of companies are not going up. Do you see a similar scenario happening in a crowdfunding scenario with so many startups coming in, and if there's not enough capital chasing it, the valuations will not really come up, and Barbara will not really make that, 100x?
Excellent question. We need downstream capital to continuously support startups as they plow forward with their growth. So the question I'll ask is that, is downstream capital trending in an increasing fashion or a decreasing fashion? My argument, it is increasing in huge ways. The plethora of Japanese venture capital coming into this region will shock you. I just came back from a week in Tokyo. You go to any Southeast Asian startup conference, you see Japanese translation kits, you see at least quarter of the room in Japanese. You see Singapore money flowing outwards now, like Singtel announcing 1.6 billion to invest and acquire digital assets. From a macro trend standpoint, there are so many large corporations who are sitting on cash. And their returns, they're getting Barbara-like returns year on year. You know, they're just growing their profits 8%, 5%, and they want more. They remember a time where they used to grow by 20%, 100%, 300%, and they miss those days. So they're getting involved in digital in big ways. Filipino telco company puts $455 million US in Rocket Internet, 10% of Rocket Internet. Telco and media companies, I work a lot with them all the time. They're just plowing money into digital, and that's just telco and media. So many industries of old traditional industries, they're going to find new sources of growth. Where are they going to go? They're going to go into tech. Where else are they going to go? Oil and gas is over. They're going to go into tech. So if you see downstream capital, just where it's trending towards, there's just more of it happening. It's not clear now, but it's getting clearer. And what is already clear is that there's American funds, like 500 startups, you know, just kind of slip in my sales pitch, but you know what I mean? It's like funds from overseas, right? Coming here to Malaysia to invest in Malaysian companies. Overseas Japanese funds coming here to invest. Global investors are coming here to Southeast Asia to invest. So I am not concerned about downstream capital at all. My biggest concern is whether or not we get started in the first place. And it starts with people like you in the room today. So with that, thank you very much for your time. Totally enjoyed this panel. Catch up with you sometime.
Thanks a lot.
You guys want to get in touch directly, just look for me on Twitter. Kailee is Khailee.